Hello and welcome back. This is the Thomas Fine Tees SEMA Operational Case Study Exam, August 2018, and we're in the video series, the 10-minute video series run by Ultimate Access, and this is video number 8. My name is Sandy Hood, and we're going to look at the application of assets held for sale. Now, the accounting standard IFRS5 deals with discontinued operations and assets held for sale. So we're looking at the asset held for sale part of that. Now, IFRS5 features within the F1 Syllabus, Section B, Part 2, Part B. And here it is within the indicative content. It was tested in May 2017, and the examiner said that it was pleasing to see that given it was a technical F1 element, so just in case you're in any doubt, the technical F1 elements are some of the worst that candidates complete within the operational case study exam, so that it was pleasing to see that this element of the task was reasonably well answered. Most candidates demonstrated knowledge and the ability to apply that knowledge in respect of IFRS5. And that's praise indeed, because the examiner has often said that even when candidates know something, they don't apply it within the scenario. So this was a very good bit of feedback from the examiner in May 2017. Candidates that did not score well here either did so because their answers were too brief or because they failed to apply the criteria to the scenario. And it's that application of the criteria within IFRS5 to the scenario that's so important if you're going to pass this exam. Right, can you name the 5 criteria? If you want, stop the tape, see which ones you can remember. I'm going to continue now. They are that the asset should be available for immediate sale in its present condition. In other words, it doesn't need anything done to it to make it saleable. We should be actively looking for a buyer. The price that we've set should be reasonable. There must be a strong likelihood of a sale being made, and the sale must be expected to take place within the 12 months of classifying this asset as asset held for sale. So we could have a warehouse. Certainly within Thomas Fine Tees, we need a lot of space to store the tea leaves prior to them being put into the mix. We don't need storage space for finished goods. We virtually produce on a JIT production basis, but certainly the raw materials need to be stored, and we need to have some work in progress after something's been in the drum, waiting before it goes onto the tea bag line. So a warehouse such as this could well be up for sale, and we may well be trying to classify it as an asset held for sale. If you can't remember the 5, then try and think of these 4. These 4 will carry you through virtually all the exam questions. SALE, asset held for sale, must meet the SALE criteria. There must be an intent to sell. The associate must be available for immediate sale. I think really that should be the asset should be available for immediate sale. The directors are actively looking to locate a buyer, and it's expected within 12 months. So quite a good mnemonic, sale. We're looking at Thomas Fine Tees, and if we had, then we would have to satisfy all of those sale criteria. So we could have a topic. It could be that the Hightown site may have been, we may have been approached by house builders looking to build houses, and they may have offered us a very good sum of money, in which case we may be considering selling the site. Similarly, we may be replacing the old green tea bag line, in which case we may well have that up for sale. Okay, what happens when a sale is made is we remove the asset from the property, plant and equipment, and it becomes within current assets. I think that's quite obvious given that the intention is to sell it within 12 months. And we may well have had the asset at any sort of carrying value, but when it goes in as an asset held for sale, it must be held at fair value less cost to sell. It doesn't get depreciated. That has been a problem with the accounting standard, but we're not going to be tested on that kind of question. So the statement of financial position will continue to balance. It's just moving it from one position to another. If it's going to be transferred, then what's going to happen in the property, plant and equipment account? You can stop the tape again. It's going to be a credit. And so what value should we be crediting to property, plant and equipment? Well, if the asset's going to be transferred to asset held for sale, then the asset should be valued at the lower of the carrying cost or the recoverable amount. Now, the recoverable amount, you will remember, is the higher of value in use and fair value loss cost to sell. So that gives us a value, and then within the T account, the way that the entries are going to take place, then sure, we're going to credit property, plant and equipment with the value of the asset that's going to be held for sale, and that then removes it from the property, plant and equipment, and sure enough, we're going to debit it into asset held for sale. And here, the value we will use is the fair value less cost to sell. So, if there's been an impairment, then that charge will go straight to the statement of profit or loss before the transfer. And here, the asset would be valued at fair value. This means that if it's transferred to asset held for sale, it will be valued at the lower amount of the fair value less cost to sell. Now, what happens if we are carrying the asset using the revaluation model? And here I've written a little comment about that you could shout with glee quite quietly to yourself, because I think that this would catch out one or two of the candidates. We would have to revalue the asset at fair value immediately prior to the transfer. And this would probably use other comprehensive income and the revaluation surplus. So we've got this slight difference, haven't we? If we're carrying it at cost, we're going to put it into the profit or loss. Now this one's going into the other comprehensive income and into the revaluation surplus. And then we would credit property, plant and equipment. Naturally, we would debit asset held for sale, and we would be debiting the statement of profit or loss. So it's this movement across as it comes out of being property, plant and equipment, which has its revaluation stored for it within the revaluation account. We're now putting it all onto the face of the statement of profit or loss. So this would be our entries in our property, plant and equipment in this case. So the statement of profit or loss would have the costs to sell in it, and the asset held for sale would be credited with would be debited, but we would have a credit entry within property, plant and equipment of the fair value. That way we're able to see the accounts balance. Right, time for a practice question. We recently took a lease on a low rent site a short distance from Hightown where we intend to relocate our factory. We plan to sell the main site in Hightown. Quite clear. Please would you prepare a briefing paper which would help the members of the board understand the specific requirements of IFRS5 in terms of reclassifying the Hightown site as an asset held for sale as far as our accounts are concerned. So we're looking at reclassifying the factory as an asset held for sale. We need to identify the question, plan our answer, check that our plan is answering the question that we've been asked, and then quickly write up a series of short paragraphs. I always recommend that you plan your answer using the word processing document rather than duplicating by using the scratch pad. But the scratch pad is there for you to use should you wish. This would typically be about 22.5 minutes, so the planning time would be half of a section, so it would be half of the 9 minutes we would normally allocate. It's worth about 12.5% of your overall exam, and 8 good paragraphs should earn you about 64% of that 12.5%. A good pass. So, writing it straight into the word processing document, then we can remind ourselves what the question is. We're looking to lease we've already taken out a lease on another site, which is lower cost. So we're looking to find out how we can classify the Hightown site as an asset held for sale. And in we go with the first 6 headings. Asset held for sale, what is it that we're talking about? The 4 key criteria that we've picked up from the IFRS5, and then what we do about the valuation. So we've got a decent sort of setup there, and then we can put in the additional subheadings that then help us to really focus when we start to write up our answer. And by having nice clear headings, then the marker can see what we've been doing, and as such it makes it easier for them to give us the marks. And at the end of the day, we want to help them to give us marks. So asset held for sale, we're going to look at the carrying value recovery, something we were talking about a few minutes ago. We're recognising that this is no longer used to earn money for the business. This is quite an interesting term within the accounting standard, but we're recognising that we expect to earn our return from the site now, not by using it as a place for producing tea bags, but earn by selling the site itself. Then we talk about the intention to sell, the fact that it needs to be immediately available, it needs to be in its present condition. Scope within both those headings for you to get a paragraph in and thereby earn a mark. The fact that we're actively looking for a buyer and that the price set is reasonable, well, we don't actually know that, but we're going to have to take that on trust. And that the sale is expected within 12 months. So all of this feeding in. But our question, of course, wasn't just tell me what the accounting standard is. It was telling what kind of accounting entries we need. So we need to deal with the fair value less cost to sell, and the fact that we're no longer going to depreciate it because it's no longer included within property, plant and equipment. So after the plan, we make sure that our plan is actually addressing the tasks, and it was in terms of reclassifying it as an asset held for sale as far as our accounts are concerned. So always watch out for this. It isn't just tell me about what the accounting standard means in the context of the business. It could be that they're looking for a fuller answer, just as they are in this case. My list of 10 headings, which was plenty enough, I think. Here they all are. 8 headings would be good enough for 64%. So 10 headings would be marvellous if we can get them all done within the limited time that we have. So we followed the process. I haven't written you a series of answers this time. I think I've used up quite a bit of my time sort of introducing the topic in today's class. But certainly it gives you an idea that you should be writing about 3 to 4 line paragraphs. You're going to be writing in a landscape layout in your exam. Make your point clearly and concisely. Don't have long sentences. 8 to 12 words is good. I would avoid even using commas if possible, just to make sure that every sentence is crystal clear to the marker. You must be writing about TFT's Hightown factory. Don't write about the standard, write about the company in the context of the standard, because as it says here, the directors can relate to part of the business that they're the directors of. They're less likely to be able to relate to a dry accounting standard. And to develop the point, give lots of becauses and whys every time you say something, so that you are definitely answering the question that the examiner has asked you. This is one of many accounting standards, so you just can think of several scenarios maybe and see how you can plan and then write up your answers. Do it yourself. By doing it yourself, it's in your brain. It's going to stick there, and certainly the exams are next week, so because it's quite recent, it's likely to stay there and be there by the time you use it. If you're reading up somebody else's analysis, it doesn't do you the same good at all. Thank you for watching, and I'll look forward to you on the next video.